Let's get
Okay.
into more serious stuff. So today's market action is no fun for really any investor.
Right.
We've got a little cartoon here that says, I'm easily triggered by the market. And his friend says, that explains why you keep shooting yourself in the foot. So this is an important thing as an investor is not to shoot ourselves in the foot and have some perspective. Courtesy of AJ here, he says, based on the current share price for Tesla, which was 402 at the time, I think today we closed just under 402. He says, was flat for almost the last 5 years. We hit the current price in January 2021.
Hmm. Hmm.
So it's been a challenging time as a Tesla investor. If you bought 5 years ago, roughly 5 years ago, you're still flat. And
Yeah,
then
I
also
don't
this year,
I don't know, but it's one of my what do you want to call it? My hobby horses that it's not necessarily flat for 5 years. It might be flat five for exactly 5 years,
yeah,
but if it's 5 years and a month, you might be up 20%
well, that's right.
or down 20%.
That's right. Yeah, we're talking to the, 200 people that bought exactly at that point, I suppose.
Right, exactly.
Yeah, and then he's also pointing out that Tesla's flat year to date.
Oh, okay.
Started trading the year at around 400.
Hmm. Hmm.
So continues to be a wild ride. We should expect that. Nothing has changed as far as stock market action. It's not indicative necessarily of anything to do with the company. It's just other forces at work from time to time.
Yeah, well, today it was pretty obvious that it was following the market. People argue with me on the internet today, but the reality is you can just put it up against the Nasdaq, put it up against Nvidia. It was just exactly the same patterns.
Yep. Yeah, we seem to have some people out there that think that the AI trade, quote unquote, is over.
Yeah, yeah.
So we'll see how long that lasts. Those people can sell and move on. Again, here's from AJ. He says, quick update on the Tesla chart. Chart assumes 400 for the stock. He said, let's be clear. The only reason Tesla moved recently into the 400 range was Elon's Tesla purchase, according to AJ. And he says, hence a major pullback on the market. Weakness was the likely outcome, minus $70 since early October high. He says, we're in this tricky period where a lot of great things are about to kick off, but the current business is simply too far away from the current valuation. Fine. If you're focused on near term,
Mhm,
absolutely.
mhm.
And number four, he says, hence, as I said before, the next few months could be bumpy if the market isn't supportive. Fine. That's not a particularly brave statement. And then number five, however, super strong hyperscaler earnings will keep the market up. The problem is that all except Nvidia just reported.
Yeah.
So will Nvidia save the market here in November?
So you and I also talked before we started about Tom Lee. I'm becoming a big fan of Tom Lee, and his Fundstrat group predicted this exact action just a couple of days ago. A few days ago, they said they thought it would be rocky until the middle of the month, but that we would ultimately close at all-time highs at the end of the month and move up nicely into the maybe even S&P 7,200 or more before the end of the year.
Well, that's fantastic. The middle of the month is 2 or 3 days away.
Yep.
So
Mhm.
the pain is over, Andy.
The pain is over.
Um, this was a post I did in response to Elon a couple days ago. He says that's wild that often the same people who say that Tesla is overvalued and will come crashing down are the same ones who say that a stock award contingent on Tesla being way more valuable than any other company ever is too high. So I wrote a little conversation here, Randy. Imagine how this might go.
Okay, okay.
So from the redistribute the pie people, that's a
Mhm.
way of describing some of these folks. Quote, it's crazy that Elon will be paid 1 trillion. No person should be worth that much. No one person should be worth that much. And then the response from grow the pie people. In order for Elon to earn 1 trillion, Tesla has to materially grow its earnings and market value. Along the way, more jobs will be created and billions of taxes will be paid, and we'll have a healthier and safer world. Well, the response from the redistribute the pie people, yeah, sure, that's cool, but Tesla is so overvalued, it's never going to happen. So the grow the pie people response says, but I thought you said that you don't like that Elon will receive 1 trillion. You know that if he doesn't create millions of new products and grow the company's earnings, and if the market value of the company doesn't grow, he gets nothing, right? Response, then why did Tesla shareholders give him $1 trillion?
I,
There's no response to that.
oh, well, yeah. Oh, my goodness. Yes.
But isn't that what we've been hearing lately? Is both of these
Both,
arguments?
it's like you just can't, there's no winning. There's no getting it through their thick skulls.
Yeah.
There's a dependency relationship here. And to your point about how much wealth, how much taxes that it's going to create, not only the company tax paying taxes, but the employees, the suppliers, everybody's paying taxes. It's going to be billions and billions of hundreds of billions of dollars. And I had posted this kind of like you did in kind of a headline version.
Okay, so back to the market, Randy.
Yep.
From Charlie here, he says far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. And I'm sorry, this is not Charlie's quote, but Peter Lynch, the
Right.
great Peter
Right.
Lynch.
Yep.
And this is kind of an interesting chart, and people have probably seen this before, but it's worth kind of reminding ourselves. The blue bars represent the gain in any given year for the S&P 500.
Hmm.
Okay. And you can see that there's mostly up, but there's a few down years and a few big down years. So you can
Right.
see there in 2008 down 37%.
Right.
The last big down year was 2022 down 18%. But even on the years where the market was up a lot in the 30s there many times, there was always a point in the year where the market was down for a
Of
period of
course.
time, right? Some of the drawdowns are pretty big.
Yeah.
So that's just the nature of markets. It's not something to be too upset about. It's no fun watching the value of your portfolio decline, but you shouldn't get too hung up about that in the short term.
Yeah.
If you do, it's gonna be a difficult time for you as an investor if you get too upset about it.
Well, I also posted the other day, I said, you either believe that we are going to have full self-driving, unsupervised, and robotaxis in the hundreds of thousands, if not millions, over the next 12, 18 months, or you don't. If we have those, the math is simple.
Yeah.
You can do the math. You can see exactly what kind of revenue that's going to generate, or some kind of an idea of what the revenue is. You
Yep.
and I have done it.
Yep.
And if that happens, then there's no way Tesla isn't in the thousands, unless the market decides to give it a 10 PE or something, which would be crazy since the growth should be on the order of 50% a year or maybe more. But anyway, and that doesn't even count Optimus and semi trucks that drive themselves and whatnot. There's so many irons that are going to materialize this year. And then we just added another one the other day, and I keep talking about it because I can't stop talking about it. Brian Wong and I did a video the other day talking about the space, the
The
data centers
Terafab.
in space,
Yep.
Terafab, and the data centers in space. And nobody
Yep.
can do it like Brian Wong. Other people can say, "Oh, there's going to be data centers in space," but Brian's got the amount you could put on a starship, how many starships you'd have to launch, what that would look like. I mean, just on and on. And he believes basically at some point, maybe 10 years from now, all data centers will be in space or the moon or Mars.
Sure. Yeah. And I think a lot of other industry will be in space as well. It's not
Right.
just data centers.
Yes.
Hence why SpaceX may be a very attractive long-term investment.
Right.
But yeah, yeah, no, Brian's great. Brian's done some solid work on that. Yep. Um, Shifting gears.
Okay.
Breaking news, Randy.
Yes.
The October U.S. inflation report was not released this morning due to the government shutdown.
Yes. Yes.
But what was expected to show? CPI at 3.1%, highest level in 17 months
By 1%, or by 1.1%. Yeah.
by 0.1%. So that's the breaking news today. We didn't get that announcement.
Yes, yes. Well, that's what it was expected to show. But then if you follow Trueflation, then you know that Trueflation is at least a 0.5% below what the CPI has been showing. And anybody that looks at if they either believe, again, this is kind of like you either believe the Fed chair or not, but the Fed chair says that 0.4 to 0.6% of this is price, not inflation. It's price based on tariffs.
Yeah,
And therefore, even if you take the 3.1 and take 5% off of that, you're at 2.6. So I think this is not. that big a deal inflation wise. I just, sorry, that's where I come.
You're alone in thinking that, Randy. Everybody else is freaking out. Yeah. Yeah. And speaking of freaking out, this
Oh,
guy's getting robbed. He says, "You're too late. I just went grocery shopping." It's a good inflation cartoon.
yeah, yeah. Good inflation cartoon. Perfect timing.
Yeah.
Yeah.
All right. Let's check in on the market.
Okay.
81% of the companies have reported earnings for the third quarter, and S&P operating earnings are on pace to hit another record high over the trailing 12 months, up 13% over last year.
Yeah.
So not bad.
Very good.
But I have some bad news.
Oh.
Only seven companies have really contributed to that. Yeah.
Something like 50% of the total earnings growth was
Pretty much all.
pretty much all. Okay.
Yeah. This comment here, this is from Goldman Sachs. The S&P isn't what you think it is. The 500 implies diversification, but the Mag 7, Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla now represent over 35% of the entire index. And since 2023, these seven stocks generated nearly all the gains. The other 493 companies
Uh-huh.
barely keeping pace with inflation. Yes,
This is the stock price you're talking about, not the earnings.
this is this chart, I think, is the stock price, but I
Yeah.
think the earnings are similar, if I recall.
Okay.
I don't think there's much earnings growth in the rest of the S&P.
Yeah. Okay.
Um, I think we've looked at that before.
Yeah.
Um,
Well, there's earnings growth for some and earnings loss for others. So you have, or no earnings growth or negative
yeah,
earnings growth.
yeah.
So,
It's not like there's no other companies
right,
growing earnings.
right,
It's just
right,
that there's a wash across those 493.
right.
Yeah.
Yeah. I think 87% beat or 87 was the biggest number I've ever seen, but they said back in 2021 they had a bigger quarter.
Yep. So that's interesting. I'm not sure this is going to change anytime soon.
Yeah. Yeah.
There's certainly periods of time where the stocks, underperform, but
Right.
that tends to be fairly short and sweet period of time.
Well, also the guidance has been outstanding
Yeah.
this quarter. I don't remember the stat again, but it was again maybe the best since 2021, 2020, something like that.